Folks, welcome to another Thursday night Stock Charts Live. Joseph, hey brother. John, top of the morning to you. John down in New Zealand. Happy almost Memorial Day weekend. Mr. G. Howdy, market enthusiast. All right. What we're going to talk about tonight, the weekly charts. How are we poised to close out the week? The one caveat that I'll provide is that tomorrow's going to be a light volume day, absent some geopolitical event. It's going to be a holiday weekend. The big boys are cutting out early. If not, they've probably already cut out. And you should expect an up day. I suspect that we will close up on the day, but on very light volume. So I'd be wary getting big into any one position to the long side, because you may come back to a little bit of surprise to the downside early next week. Those are my thoughts. So we're going to talk about the weekly charts. We're going to go through some chart requests. I have a whole bunch of stuff to go over already. If we have time, I'll definitely take some requests from the audience. So before we begin, smash the like button, please. I beg of you. And also, if you're not currently a subscriber to the Contrarian Trader, think about joining our 14-day free trial offer. And think about also TrendSpider, automated technical analysis. They are a partner of ours, and you need to, in this day and age, folks, automate your grunt work, speed up your technical analysis by leveraging technology. It's not for the big guy anymore. TrendSpider is leveling the playing field. So please automate your grunt work, speed up your technical analysis, and improve your accuracy. Time your trades with precision. And head on over. There's a link below, 35% discount code. Take a tour. Start a 7-day free trial offer. Watch the demo tour. And TrendSpider University up top. A lot of good videos here. Great support system. And again, I give it away free to our members. Let's get to the weekly charts. So today was a very interesting day in that we saw weakness in certain areas. Tech, the Tues saw a little bit of weakness today. Here's a daily chart. A little bit. They had broken out yesterday, but then reversed. Why? I believe it's because of yields. So that's where we're going to begin, is with a discussion about the bond market. And we'll begin with the yield curve. This is a measurement of the spread between 2s and 10s, the interest rate. I know it's boring, but we need to pay attention to it, because if we begin to rally, which I think we're going to, that's going to add some pressure to certain sectors of the market, namely big tech. So let's keep an eye on this. We've spent the past couple of weeks trading sideways. We have a very close to a doji star formation, an indecision week. I think this is going to get resolved with a move to the upside. Does that mean the stock market crashes? No, I don't believe so. I think that what's going to happen is you're going to see rotation. You're going to see money moving in to retail, travel and leisure. Airbnb was one that I'm looking at right now. I was going to sell puts on it today, but I had to manage a couple of other trades late in the afternoon, so I took care of that. But Airbnb looking good. So energy should do well with rising yields. Technology, probably not so much. So pick with caution. John, is that a good support level, Bob? What support level you meaning, John? On the yield curve? I'll wait for your response. Matt Carter, YOLO, brother. AMC Face Ripper, been holding on since January. Good for you. Yeah, it's had a heck of a move. What else went up? GameStop. And the good thing is that AMC, they sold a whole bunch of shares. Oh, John's TZA 2922. We'll talk about TZA. I have my concerns right now. Coastal Collection Real Estate. Hey, Bob. Hey, Coastal. All right, let's move on. We're going to get to TZA in a moment. Okay. TLT, the 20-year bond ETF. It is up on the week. However, off the highs of the week. But what we really want to pay attention to is this chart here. And that is the TNX. And this is why I say you need to be really, really careful in this market. Because just like we're seeing back here on the yield curve, let's try to get back here. This consolidation, 2-week consolidation. Actually, I'm sorry, 2-month consolidation. This is a monthly chart. Take a look at this consolidation here. What does this mean? Why am I going over this? Well, to know where to place your bets, you have to know what the bond market's going to do. You have to know what oil is going to do. So that's why we have these sessions, is to not completely understand because one trading day left to go, but it's to get a good feel for what the probabilities are for bonds moving up higher. What's the what if here? Well, what if we break out on the bond price? Well, you're going to see pressure on technology. You're going to see your industrial names move up higher. Oil producers move up higher. So watch for a breakout out of this bull flag setup. And this is a very bullish setup. I think that yields are going to move up higher. So if anything, we'll be looking to add to our shorts of certain sectors, meaning technology. But I do believe that we're going to see strength in bond yields, especially with the crazy spending that's going on. It's not going to stop. Here's a 10-year yield weekly chart. You can see we put it in a new weekly low, but we're bouncing here on the week. And we may just close positive as well. Let's go to a daily chart. Forget the daily chart. It's a line chart. Let's go to the 10-year yield on TNX weekly chart. Look at the pop-up higher today on yields. So yesterday, and I went over this last night with members on Market Wrap, is we flashed a bullish reversal bar on the 10-year yield yesterday. I expected a follow-through, but I didn't expect a big move like we got today. Shockingly, though, names like Microsoft. We closed out a trade today in Microsoft. We had a strangle. That's an options trade where you sell a deep out of the money call, a deep out of the money put, about 45 days out. We had about, 20-odd days left to go before they expired. We had about a 57% profit in the trade. I said, you know what? Let's take it off. We could always reopen it. But you see here, Microsoft is behaving very, very poorly. And this is going to hold true for the entire tech sector. I mean, yields are up, tech down. I'm shocked that they held up this well, to be honest with you. But that doesn't mean the rest of the stock market is going to roll over. We're not there yet. Now, the tips. Treasury inflation protected securities. They are up on the week, off the highs, but looking pretty good. I think we're going to get a continuation move up higher. We were down today. However, we reversed off the lows of the day. So what do we read into this? We're reading into it that the bond market is signaling that it wants yields to go up higher. Why? It's because we have way too much debt. And the markets want to get paid more in terms of interest for assuming the risk of our debt. So what else is responding here? The tips, because they're worried about inflation. That's what the bond market's saying is, hey, you got to pay up. You're creating inflation here. So the tip market is going to take its cue, and it's probably going to head up higher. Not a wonderful day today, but not a bad day either. The U.S. dollar. Got to update this. Now, the dollar had broke down below two key support levels. And this is key. This is very important. We broke down below two key support levels the week of May the 3rd. Now, what they're trying to imply here on this chart is that they're going to try to put in a W formation. I don't think that's going to happen. Currency traders will get lured into it. They're going to want you to believe that we're going to put in a higher low. We may rally up to 90 or so yet again, but I think that rally is going to fail because 90 has now become, this is the dollar, this is the Dixie, DXY. The dollar can't break out above 90. It's acting as stiff resistance. So I think that we break here. Maybe not this week, sometime next week. What's that going to do to the commodities markets? We're going to talk about that in a moment. Yes, Stokes are oversold. Might we pop? Sure. I think that's going to fail. It's a flawed currency right now. Good question, John. Is there some seasonality on the dollar? We'll take a look at that. I like your thinking. So my answer to you is going to be, I don't know. But when we go over to TrendSpider later on, we'll use their seasonality feature, and we'll bring up the Dollar Bull ETF, the UUP, and we'll take a look at it. Good question. Let's go to a daily chart. John, don't let me forget that, okay? If you think I'm going to skip over it, just drop a note in it, and I'll make sure I go over it, okay? All right. The dollar reversed on the day. They try to take it up higher. Good consolidation here. I think ultimately we fail and we go lower. Stokes are looking good. This bodes well for a pop up higher. But I think ultimately, again, it's going to fail. The VIX. Horrible week. So the VIX is under a tremendous amount of pressure. We're at critical support. I think that we're probably going to break support tomorrow. Do we close there? Probably, again, because it's going to be a light volume day. It's a Friday. You usually get short covering Friday. The big boys are not in town, so they're going to want to keep this market healthy, everybody happy, no drama, because they're away. They don't want any problems, but they will be back. Daily chart. Crushed today. All right, so the VIX is implying that we're going to see higher highs on the S&P 500 and obviously lower lows on the VIX. The Dow Transports, weekly chart. Now, the transports had a very bearish week last week, yet no follow-through on the week this week. And the reason why I think that the transports have been weak of late is due to the rest in bond yields rising. So what we're seeing here so far this week is a consolidation a wedge formation forming, and we're looking for a probable breakout on the Dow transports, assuming that yields move up higher. And I think that's what's going to happen here. But, man, I got to tell you, you take a look at the stochastics, the leading indicators, MACD. I mean, these are all so long in the tooth. It's absolutely ridiculous. But, if the market's consolidating, it's pressing up higher. If it breaks out, who are we to fight it, right? So as it stands right now, it looks like we're going to break out. Get ready. How long does it last? Not quite sure. Let's take a look at it quickly, since the month is drawing to a close. Let's take a look at a monthly chart. Wow. So this is a 2 standard deviation Bollinger Band in green. Let's play with this a bit. Let's swap this over to a 3. Let's see what we're dealing with. It could still run. This could still run. Let's save this. Everybody ready for the weekend? Note how volume is dropping off dramatically month over month. I mean, we're not even going to roll in anywhere near the moving average yet. We're probably going to break out. The Dow Jones, another weekly chart. Let's update it. I mean, it's telling us a story here, and that's that it's consolidating. 3D sector popped up this week across the board. I haven't even watched that sector in a long time. Can you throw in a symbol? Anyone will do. So here's where we're at. I mean, we're very extended. We're very long in the tooth on all these charts. And you need to be optimistic, but the reason why I share these weekly charts and the monthly charts is a reminder that it looks as though on a weekly time frame we're going to get a continuation breakout. You take a step back and you take a look at your monthly charts, and it kind of puts things in a much grander perspective. Look at this bull run. And we haven't had a real correction since early this year, last year. Volume's going to come in below average. But it can go up higher. I'm not going to be the least bit surprised. The S&P 500, another consolidation. I mean, I thought a couple of months ago we were topping out. I was right, at least on the small caps, but there's been no follow through to the downside. I really need my glasses. There we go. Okay. Every bid's getting hit. Every time they try to sell it off, new money comes in. MACD is on a very, very thin sheet of ice. S&P 500. So what the S&P 500 needs, because it's not going to get help from tech if you get a breakout on yields. Transportation stocks, industrials, energy, and mainly the banks. And I'm going to go over biotechs in a moment. I think biotechs are going to rally as well. I don't know if Franklin joined us yet, but I'm going to go over LABU as a potential trade. IWM, of which I'm short, and I haven't added to this trade in a while. Been waiting for a break, and we are not getting fed. I mean, momentum indicators, Stokes are going our way. RSI is trying to duke it out with resistance at current. I'm not going to be the least bit surprised to see a breakout here. Now, this is a uptrend channel chart. And as you can see, we're nearing yet again on a weekly time frame the upper band of resistance. Do we break out? We could. I mean, we've done it before. We've broken out, failed, broken out, failed. And this is one of the reasons why we shorted. Why else do we short it? Look at this weekly chart. Oh, boy. We shorted it for the monthly chart. Sorry, folks. I just lost my spot. This is a monthly chart. And really not much has changed here in terms of why we're short. I mean, if you go back, this chart goes back all the way back to 2002. We have never, ever, with the exception of when I first shorted the IWM, have never been this overbought relative to the Bollinger Bands or relative to its 48-month moving average. It's historic. Yet, with all the cheap money that's sloshing around out there, money's got to find a home. And it's going to find a home in the small caps with the poor son of a gun that goes buying these things, not understanding that the end is going to be ugly, brutally ugly. They're going to get hurt very, very poorly. Badly, I should say. Oh, that's right. DDD. All right, the Tues we've kind of already spoken about. They are up on the week. They've behaved very, very well in the face of yields bouncing back, but the yields are down on the week. And you can see what happened here on a daily time frame when yields spiked up higher today. We rolled over with a bearish reversal bar. So beware of a breakout on yields. The banks, love the banks here. Yes, they're overbought on the RSI. Yes, they're overbought on the Stokes. Forget that. It's all about price and volume action, folks. So what we're looking for here is a breakout. And the banks love rising yields. Let's go to a daily chart. Let's see how we close out the day. Yeah, we're going up. We're going up. Look at this. W formation on your RSI. Stokes are a little bit sloppy, but they could easily break out along with price. Volume, very light. W formation on Williams percentage R, just like you had back here. Look at that run. We're going up higher. Technology is probably not going up much higher. You could argue that looking at this chart, that your Stokes are hooking up or getting ready to hook up. Sure, I'll buy that argument. But what's going to matter most, the proof in the pudding is going to be, can tech hold up when yields bust out? The semis, a very, very good week, up nearly 3.5% on the week. We have a breakout. One trading day left to go, right? We don't know if it's going to be a breakout yet. We'll know at 4 p.m. tomorrow. But as it stands right now, it's looking pretty good. Volume, not so good. But this is a very nice, and this is what's really important here. You know, it all comes down to price and volume. Price and volume. These indicators here are all secondary. What it comes down to is this. When we roll over, are we taking out prior lows? The answer is no. We have a higher low. And it appears as though we're getting poised to break out to a new higher high. Now, that flies in the face of what I just said about technology, in that if you get a breakout on yields, can the semis hold up? And the answer is, I don't know. There's a semi shortage. So is that a factor here? Maybe. But as it stands right now, we can only deal with the cards that we're given. And at current, it looks like we're going to get a breakout here on the semi stocks, or at least an effort to break out. Can tech hold up when yields bust out? The name of the game is long. Probably not your high beta growth stocks, your Neos of the world. Probably, Tesla, maybe. Neo, good week this week. But again, yields are down. Tesla, really good week. But Tesla, we remain in a downtrend. It's a good week, but 1 week doesn't make a trend. Here are your lower highs. And what happens if yields break out? I bet you that Tesla goes down. All right, biotechs. This is the LABU. It's a leveraged ETF putting you long with the biotechs. I like to trade it because I like to trade options. And it provides me the volatility that I like. Now, we've been watching this, and rule number one, key number one, to identify when something is ready to be bought after a brutal sell-off, it's got to stop going down. Check that box. No new weekly low this week. And you could argue that we have new support. Stokes are hooking up. Very nice. So we're going to be eyeballing this as a trade. I'll talk about it more with members once I think it through. Daily chart, very, very nice. Bullish reversal bar and a breakout today. Volume decline, though, below average. I spoke about this, I think it was last week. This formation, like a cup with handle, it's a formation on RSI for LABU. And we have broken out on RSI. Stokes as well. Short on Shopify. JW, not a dead cat on LABU. No, I don't think it is, JW. I don't think it is. I think it's, You know, I wouldn't go by a daily chart. I'd go by, the monthly chart first and foremost. Nice bounce on the month. You'd want to see that we close above resistance levels. The lows of last month and very close to the lows of the prior month appear to be support for this month. So check that box. Stokes are declining down below 50. I do not like that. And we have big down volume on a monthly time frame. Clearly under distribution. But again, as you drill down and you take a look at the weekly chart, you're setting up nicely here. Does it hold? We don't know. We don't know. We don't go jumping in with both feet. We're not gonna go buying. Let's do a hypothetical. If we want to get long of LABU tomorrow, we're not going to do it all at one shot. 1,000 shares. Suppose we want to buy 1,000 shares. We're not going to do it all at one shot at 9:30 a.m. tomorrow. First off, I never buy at the first hour of trade. Just don't do it. And we want to buy in increments. So we'll know when we're wrong if we fail to hold this week's lows. If we fail to hold them, then we get out. We stop out. If we're right, that means that we'll be paying more on breakouts. Simple as that. So I'm not going to be afraid to open up the trade. And more than likely with LABU, I'm not going to be buying the stock. I'm going to be trading the options. So right now, let's say we closed at 65. I'm going to round it up, 65. I'm going to do I have a probability calculator. And it tells me my probabilities of, let's say I want to expose myself to a 1 standard deviation move. That's about an 85% probability of making money. So let's say that it's up at 90 on the call side and down at 40 on the put side. Well, I'd sell a call to the upside and I'd sell a put to the downside, bringing in premium. Right? I'm not selling. I'm not buying options. I'm selling the options, and we're generating cash flow, and that keeps us kind of not overly invested on the trade. We're watching. We're waiting to see whether or not this thing is going to perform. And we're somewhat neutral on the trade, so it keeps us invested, but from a distance. If I know that sounds odd, but it works for us. And case in point, Microsoft, we did around 55% profit we booked today. So more to come on this trade, members. XOY, consumer discretionaries. How much time do we have? We have time. XOY, up on the week. Good reversal. I mean, there's some strength here this week. This is optimism. I mean, last week we bounced, no big deal. I would have thought we would have retested 165 again. We didn't. In fact, we put it in a new weekly high. Volume's going to roll in light. I don't like this chart. I would be remiss if I didn't say that I'm suspect of this chart. You see these filled candlesticks here. One flashed today, one flashed a couple of days ago. This is a sector that's being limped up. Volume's been rising, so people are believing that this is a healthy rally. I'm not buying into it. In fact, I would be concerned about whether or not we are forming a head and shoulders setup. There's our neckline. I'm not saying it's going to happen. I'm just suspect of it happening. And if it breaks, XLY becomes a short. So we'll keep an eye on it. Energy. Ooh. All right, I want, if everybody could just watch this line here. This is the correlation of the XLE energy relative to oil, USO, the symbol for this purpose. The correlation is on a weekly time frame, about 94% of the times they trade in tandem. And I think that we are probably going to break out when the only thing I don't like here is this. When I think is going to be when oil makes a big move. And we're going to go to oil in a second. This correction is coming to an end. We're just consolidating now. Volume's light, but that's okay. We're not looking for an accumulation. We're just looking for backing and filling, a base to get established. And the longer the base, the greater the probability of any breakout succeeding. Now, to have a breakout on energy, you need oil, USO. We have a new weekly high. Volume's going to roll in light. Daily chart. Oil making a move here. Looks like we're going to break out. Ooh. Just watch out for this, folks. You don't want to see this really if in a healthy commodity stock, cupcake, whatever you're trading. You want to see rising volume on a breakout. You're not getting that here. You're getting declining volume. That makes it suspect. Emerging markets, a very good week. But if we get that pop in the US dollar, expect a pullback on emerging markets. I don't think it's going to last, but we may be seeing the end of this sell-off on emerging markets come to a rapid end. And the reason why I say that is because we are at the precipice of a breakout on a weekly time frame. There's your base, and we're beginning to break out. These Stokes need to hook up. RSI held 50. It's going to rise. I don't like volume. So emerging markets firming up very, very nicely. The trade for us will be EDC, the leveraged ETF. Very strong week this week. We'll also be looking at EPI. India, man, they bounce back quick. Loving India. Volume could be better, but loving the price action here. VNM. This is Vietnam. Loving Vietnam. So these are our plays. EDC, VNM, EPI. Because when this market goes, brother, you're gonna want to be in emerging markets. You're gonna want to be in gold, silver. Uranium weekly chart. Beautiful bullish reversal bar on the week. Volume is pretty good. Taking a look at, do I want to go over gold right now? No, I don't want to go over gold right now. Wheat, weekly chart, bullish key reversal bar. Get ready. Get ready. We closed this strong this week on a bullish key reversal bar. You got to be looking at the DBA. This is the agriculture ETF. Beautiful bullish reversal bar. Corn today was just in fuego. Huge rip on the week. This is a bottom. This is your higher low. Obviously gets me excited. Look at this rip today on corn. What were we up? Almost 5 3/4% on the day. Gold. All right, so we closed above 1900 earlier in the week. We gave it up. So 1900, clear resistance. Volume this week is going to be light. Now, the good part about today was this. Daily chart. Oh, wrong chart. We did rally off the lows of the session. A little bit of a doji star formation. Loving the moving averages. They're all moving up higher. Next week, we should get the 20-day moving average cross above the 200 period moving average. That will be the first time that has happened since the 2nd of February. Last time we were above the 200 period moving average using the 20 period moving average. So we remain bullish on gold. The GDXJ, our gold mining trade. We have 2 gold mining trades. One, the junior miners, GDXJ. The other is leveraged ETF, which is NUGT. But GDXJ is up on the week. Doji star formation. Beautiful breakout several weeks ago out of this flag formation. Volume light on the week. Silver miners. Up on the week. We bought more silver. What was it? Day before yesterday? Yeah, day before yesterday. Beautiful bullish reversal bar today. You got to love this. Silver, weekly chart. We have the leveraged ETF, excuse me, AGQ, and we're up 2.5% on the week. Beautiful, beautiful W formation. Once we rip through 64.32, the street's finally going to wake up, and they're going to be buying silver hand over fist. If you believe that silver is going to go up, if you believe that there's inflation, it's going to go up. You gotta be thinking about your position now. Build that position now. Let's take some chart requests. Do I have anything else I want to go over? Brazil. How are we closing out the week on Brazil? Brazil looking good here. Big commodity play. But I still prefer India, Vietnam over Brazil. Let's do some requests. All right. Working up a sweat. TrendSpider, 35% discount code below. Take advantage. All right. Cena. Do we have Cena on? Cena's looking for PBW. Oh, that's right. This is the that clean air ETF that he likes. Yeah. This was looking good. All right, so on the week, really nice breakout on PBW. And if you're looking for a price target, I'm using the automated trendline functionality here. This upper band in blue is your rising upper band of resistance. It used to be a lower band of support, but you are going to get a little bit of resistance here as well. $96.55. Where did we close? We closed very strong here. We have plenty of upside. So PBW looking very good. Let's go to a daily chart. And you can see, again, using the automated trendline functionality, we broke out yesterday, pulled back, did a retest today, and flashed a bullish reversal bar on volume. PBW is a buy. Love it. AI. Also for Cena. C3AI. I think this is a new one for me. We go to a monthly chart. Yeah, definitely a new one. I got a good feeling though. Weekly chart. We're still putting in lower highs and lower lows. That I don't like. I have gone over this chart before. I have gone over it. I want to see it close above 70.51. Where do we close today? 63.52. That's a little bit too far away. So let's revise my comment here a bit. Very nice. These support levels back here in March, April, again in April, weekly chart. We broke through them last week. This week we did a retest. The support level looks good here on AI. Very nice. I think it goes up higher. I think it's a buy. I would stay small, but it looks like it's a buy. We'll call it a SHLS. Hey, Paul. If I didn't say hello to you already, I apologize. SHLS. Shoals Technology. I like to take the automated trend lines off so I'm not influenced too much. Not enough data to talk about. The monthly chart, weekly chart, dead cat bounce. We don't have a clear defined breakout as of yet. Let's see if there are any automated trend lines. I don't think they're going to be. No. You need a pullback in a higher low on a weekly chart. I'm not loving it. It could head up higher for all I know, but it's not something where I want to put money to work just yet. Now, the lows of May the 3rd are now acting as resistance. 27.16, we closed at 27.20, so we're right there. Watch for close above 27.16. Daily chart. Yeah, we're right at resistance. So I couldn't condone a buy here. Ideally, the ideal situation is a pullback, a higher low. That way I'm able to do this. I want to be able to take my crayon out and draw a higher low. Can't do that yet. I feel like there's an appendage missing. So we'll revisit it. I wanted to do the dollar seasonality question. I think it was John Spencer who asked me to do this. So let's do that now. Cena is on. Let's do seasonality, functionality. Dollar bull ETF. We have data which goes back to 2007. May is a very strong month, but not this not this month. June is horrible. It's the worst month of the year for the dollar. And it kind of makes sense because if you take a look at the chart of gold, the GDXJ, through August, it's a seasonally favorable period of time. And the dollar and gold trade inversely of one another. So this makes sense. So seasonally, May, great month, but it's over. June, a horrible month. So moving forward, not looking good for the next couple of months for the dollar. Buckle up. All right, let's get rid of this. All right, Nikola. Wow. Monthly chart, nice bullish reversal month. No new monthly low. That's good to see. Stop going down. We have a breakout on a weekly time frame. Nice. Well, we have resistance above at 1633. 1633. Right here. Nice move today. Beautiful move. We're probably going up higher. I'm going to assume that there are a lot of shorts in this name. So we may just cut right through that resistance like a hot knife through butter if I'm right. Shopify. Shopify broke out on May the 24th, failed to break out on the 25th. Very close to a retest today. I'd like to see a close above give me 1250 on Shopify. I would get excited. Nice little W formation forming here. This would be great for an options trade. Good liquid options. Shopify looking good. I want to see a breakout though. 1250 the price. What else do we have? Paul. Do we do yours CHW? Losing my mind. CWH. Camping World. Monthly chart, very nice. We're down on the month, but man, this is a spinning top formation. I think we're probably going to proceed higher. Weekly chart. Yeah. We put in a new weekly low, but this is a bullish reversal bar. Rising moving average is right below. Daily chart. Nice breakout today. There's your breakout. What would be good is if you got a retest of that breakout point. And there you have it. Camping World looks good. We'll leave it off with Anthony. Hey, Anthony, what do you think about LODE? LODE? Take a look. Anthony, you should put your symbols in the members area so I don't miss them. Comstock Mining, familiar with it. Nice. Very nice. So, yes, we're down in the month. It doesn't bother me. No, it's the quality of the down month, right? What type of a down month is it? Are we closing at the lows of the month? Are we off the lows and we're close to going positive on the month? And how does it look relative to the prior months? So when I see this, I don't care that it's down on the month. Doesn't matter to me. First of all, it's in the mining sector. Everything mining is going to be in fuego. This is broken out of a massive, massive base, and this is a multi-year base. And we have broken out consolidation. Take your crayons out. I did not want to do that. Let's try that again. Maybe I'll get it right. All right, kind of sloppy, but there's your upper band of resistance. We're looking for a breakout monthly time frame. Doesn't mean we have to wait a month. Weekly chart, love it. We broke out this week. This is a buy. Take note of the RSI. RSI is broken out. Comstock looking very, very good. Daily chart. Nice orderly pullback here. We're breaking out. I like Comstock. Coke, we'll leave off with Coke. KO. I am currently boycotting their products. Caveat, I am not pleased with Coke. I wouldn't buy this stock, and it has nothing to do with politics. You're trading up and above the third standard deviation Bollinger Band on a monthly time frame. That needs to get resolved. For those not familiar with the automated trend lines, take note of these lines in blue, red, green. I'm going to take them off. And if you just pull this chart up, think about if you click that button. Look at this breakout here. And this is it's probably going up here at $444 and rising. So Coke overbought. Monthly chart, can't wait for their next earnings. Weekly chart, very overbought. We're up on volume. This has got to get resolved. So I wouldn't be a buyer here. The shares are longer term, probably going up higher. Daily chart. You know, the shares are obviously under accumulation. But the weekly chart, monthly chart, very, very overbought. And even on your daily chart here, you have RSI on Coca-Cola near 90. That's crazy. So I wouldn't buy it. And if they push Coca-Cola up above 90 on RSI, I'm probably going to short it. So I would wait to buy this one. Longer term, it's probably going up higher. Again, you probably get up to $4.44 per share. And with that, folks, thanks for joining in. Have a profitable trading day tomorrow. Smash the like button if you would. Don't forget TrendSpider 35% discount code. And please, most importantly, have a really great Memorial Day weekend and be well. Take care.